Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday. It's May 21st, 2012. We'll be looking at the four major U.S. markets here, starting with the Dow Jones Industrial Average. We have seen a bounce today that has actually stopped us out of all of those trades, and that's fine. That's exactly, we talked about that happening, potentially happening today in Friday's market analysis video. So this isn't a shock to us, and we want to let that bounce go. Continue as high as it can go, but keeping an eye on candlestick formations, overall trend formation, and the news is out there. Last Friday video we talked about how you were going to expect to see some news on the G8 summit. They're going to tell you something. They're going to try to stem this slide here in the market with some kind of positive news or whatever. And they gave a little backing to, promising increased jobs and growth in the economy as well. They've been promising that since the start. The problem is, and the reality is, if you follow us on Facebook, Twitter, Google+, you got the news article that I sent you guys, and in that they basically state that they don't really have any control of the situation, and that's the reality. That's why they've been saying this stuff before, and we keep falling apart. And we always fall apart at a key particular point. Whenever we get a flare-up in the Europe financial crisis, whenever that happens, we get smacked again. That happens every single time. So keep that in mind. Nothing they say in the summit actually changes the fact that Spain's bond rates are just going higher and higher, and eventually they won't be able to pay it, and they'll say you have to bail us out or we default. So this is what is actually happening and why we keep getting these major sell-offs. Now let's look at the chart here, the Dow Jones Industrial Average. We are in a clearly defined downtrend. You have a lower series of highs and lower series of lows. There's nothing about this trend that you should be buying. In fact, any move to the upside should be considered a counter trend move and not something that you want to buy, but in fact something you want to short. The objective, of course, will be shorting at the top, not now, and looking for, if you short now and she rallies up to this point, you're going to be under a lot of pressure, and you're not going to want to do that. So wait for it to form properly. There's different ways it can form. Right now, we talked about the Ultimate Oscillator last Friday. We said when she's down here below the 30 line, that's when you start looking for a bounce. You expect to see something like that. After you've had 6 consecutive days to the downside, again, that's the high end of, that's above average, so you don't actually expect that to keep falling straight down. Eventually, you're going to get a higher series of highs, a higher series of lows like you've seen today. So let this continue to bounce, but don't play it. Do not get long this market. I really don't like the way this chart looks. Any of the charts that we show you today, and remember, the U.S. markets are the strongest of all the market charts that we're looking at. So if the U.S. markets are the strongest and they're showing you very weak signals of reversal, like for example here, no hammer candlestick formation. The same condition was here, same condition was here. And in all those cases, we told you those bottoms will not actually hold. It can be a bounce, but it will not actually hold when tested because there's no hammer candlestick formation, meaning there's no real buy pressure there. And if you were to check the volume levels, you will see, again, there's no real buy pressure even in today's activity. So let the market bounce, but don't buy it. Wait for a nice reversal signal, such as an inverted hammer, like this shooting star formation at the top of a pattern. Basically, you get a rally, and then you want to see something like this form, and then you could take that as a short signal if it's confirmed the following day by a lower series of lows from this candlestick to that, and a lower series of highs from this candlestick to that one. Okay. Another way you could find it would be a bearish engulfing situation. Those will be looking like this. We basically have a bearish engulfing of the previous day's activity. That will work as well, in effect, when you blend those two candlesticks together, the up day here and then the down day that followed. You're in effect getting the exact same signal as this. It's just taking 2 days to form rather than a single day. So any one of those would get my attention, and I would be looking for a short position to re-enter at that point. But right now, I'm just going to let her bounce. A couple different things you also need to note is whenever you're looking at the chart, there's a couple places you can expect to see resistance, and that would be the previous support line here, here, and here. It broke down. You can see that support would then become resistance. So that's something that you can expect to start finding resistance there. You can blow through that temporarily, so just don't think that that's the end-all be-all. And if that actually get priced up to that level, don't start shorting. You still got to wait for other signals as well. But again, that would be one of them. Another one would be this right here, this 50-day moving average, this red line right here. Any price activity to that level is expected to find resistance there. So those are the two key resistant levels I'll be watching on the Dow Jones Industrial Average. The NASDAQ is the same basic overall story. We were on the Ultimate Oscillator down below the 30 line going into the weekend. and we expected to see a bounce sooner or later, and there she is. We've been stopped out of this short position. That's fine. We've been trading this one perfectly, but we keep getting back in on the short side, and that's what we want to do. Counter trend move here, look for a shooting star formation. You get one, you get short. You also got another situation here. We've got a bearish engulfing signal. That would work as well. Look for resistance at the 50-day moving average or at the previous support that is broken down. Right here, you'll notice we broke this support, and I called this one pretty effectively here. I've talked about this in the past. This shooting star formation here, typically when you see them at the bottom after a sell-off, you're seeing a buy signal. But in this particular case, because you were breaking support, this support here, you were actually seeing a peaking signal that we're finding resistance where that previous support was, and then you sold off from there. I'd be looking to find resistance there again, so keep an eye on it. Let it run to the upside, but do not buy it, and then look for another opportunity to get short, another sell signal, some sign that we're peaking again. We'll go short again at that point, because I do not believe this low is holding. Again, there is no hammer candlestick formation at the bottom there. This is not a buy opportunity. It's a counter trend move to the upside. The Russell 2000 Small Cap Index, same overall story. Look at the ultimate oscillator below the 30 line. Does today's jump surprise you? It shouldn't have. So we also have to look at the overall situation here, and we see that we have, actually it's harder to see on this chart now. We've been following this for a while. Nice formation of a head and shoulders topping formation here, major top formation. So this top right now, if you look on the bigger picture, is the peak for your market. So when you're looking at this saying, oh, we're going to rally here and rally and go higher and make money, where are you going? You've got a major market peak right here because of what's going on in Europe, and it's not solved. So now you're getting a bounce to the upside. Let it bounce, but we're looking for an opportunity to get short again. Same overall situation. Previous, let me clean that up. Previous support, you're looking for resistance there. This is the previous support line of the neckline. It's quite common in a head and shoulders formation to get a test of that neckline to see if you then form a resistance line where the support used to be. So a rally to the upside wouldn't surprise me. It would find resistance at this level here. Also, we could have resistance at the 50-day moving average because we're no longer in a bull market, we're in a bear market. When you're in a bull market, you find support at the 50. Once you start closing below that, breaking down, you start to find resistance at the 50. So again, that would be something to keep an eye on. Again, I would not be a buyer of this market. There's no strong signal here for a reversal. This is not a hammer candlestick formation. We talked about that here as well as here. When there's no hammer candlestick formation, there's no true bottom. The S&P 500 Large Cap Index, I could just say ditto on this one. It's basically the same overall story. I've already shown you the other charts. However, let's go over it just to make sure everybody understands it. Here's the 30 line on the ultimate oscillator. You fall below it, you expect to start to see a bounce. Sooner or later it's going to happen. No market falls straight down. You've had 6 consecutive days to the downside before you get a day to the upside. Whoop-de-doo. No hammer candlestick formation. Overall trend is a lower series of highs, lower series of lows. Remember what I told you back here. Here, there's no hammer candlestick formation. She will see a lower low. We talked about that before. People said, no, you're wrong, blah, blah, blah. What happened? Blah. Okay, here we are again. Don't get hyped up in the market. Let me tell you how it works. When the market's moving down, all your news that you see will be negative, talking about how it's the end of the world and you don't want to be a buyer. When the market's moving up, the news automatically changes, and yay, it's a great day, and everybody should be buying. Obvious opportunity for the greatest of investors, blah, 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 blah. Just read your chart. If your chart's got lower series of highs and lower series of lows, you're in a downtrend. You want to trade with the trend, not against it. Pretty simple, all right? Okay, so keep an eye on this chart. We're looking at the same thing we've talked about before. You can draw this a few different ways. We could draw it like this and say there's going to be a resistance line there. You can also say there's resistance at the 50-day moving average. Lots of different ways this could trade out. I'd be looking at this point right here to start seeing if I get some kind of resistance at this level, because we've seen some breakdown here, also some shooting star formations. So yeah, I'd be looking for right about there before I start finding any signal for getting short again. Now, it could happen tomorrow for all I know. You could get some kind of bearish news, something like that, but at that point, we'll have to look at it again. But right now, I just let the market rally and stay away from it. If you've not been to our free website at perfectstockalert.com, well, then you're a loser, because it's free and it's awesome. So check it out. All we ask in return, please refer a friend, aka share our videos online. God bless, take care, and I'll see you in tomorrow's video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.